Month 11 of the Road to 100k series with the fivers. This is going to be the penultimate episode of this series, and February, which is the month that we're just starting now, is going to be the last month that I publicly share the results of this fivers challenge. I think this series has been a very accurate representation of what true trading looks like. If you look at any genuinely consistently profitable trader, there will be years where they make 0% profit, and there are other years where they make 30 to 40% profit. And I've learned a lot trading this challenge, particularly sharing all the trades online with you guys. I was actually looking at a Robbins Cup winners results recently, and if you don't know, the Robbins Cup is a trading competition where the best traders in the world compete to make the most profit that year. And obviously you trade those challenges a little bit differently, you risk really highly. It's not really an accurate representation of what true trading looks like, but you often find the best traders there. And I was looking at this trader who'd previously won the Robbins Cup, and he was making 10% some years, 30% some years, and -3% some years. And looking at this guy's results made me feel a sense of satisfaction, because looking around, you often see these traders that are showing, doubling their money in a year, but what you don't see is when they lose it all the following year. And I hope that watching this series, if you've been following along, this is a taste of what real trading looks like. It's patience, it's consistency, and it's not always glamorous. And that's what I've really wanted to portray with this series. This month, which was January 2026, first month of the year, we actually had a little bit of drama. We had two trades, and I'm going to talk to you about them in just a moment. And one of them was a pretty big winner. So that's quite exciting. We'll get into it in a moment. As always, if you're looking to start a Fivers challenge yourself, I'll put a link to Fivers down below. They're the most reliable prop firm in the industry, one of the oldest around, and I've received nearly $10,000 in payouts from them. Links down below. Okay, let's get into the charts. So the first trade I took this month was this flag plus, also known as a 3-bar flag, on New Zealand JPY. Now, I'll draw on my entry right here. I use a 15 pip stop loss, which you can see is quite reasonably sized in this case. Looking left, we are coming from just purely range-bound price action. But there is one thing which makes this pretty good, and that is the fact that we've got a little liquidity sweep over here. So you can see underneath these lows, we broke lower, and from there we started this huge move to the upside. But this isn't really relevant when you have a huge impulse like this, because at this point, price has kind of proven that it wants to move to the upside. So right here, we've got very, very clean impulse. Look at these most recent candles. Such clear momentum. Back here, we're not moving with as clear momentum. I'd say we're trending more correctively, which is quite common on this pair. And later on is when we really started to see momentum kick in. Now, we got a flag plus, and this isn't a traditional flag where we have this counter trend candle. We actually, to get a flag plus, we need an inside bar, which we got here, followed by an outside bar, and then the entry candle. And flag plus on NJ, one of the best patterns for this specific currency pair. And I've got a huge tolerance for all sorts of things on this pair when I see a flag plus. So even if this wick was bigger, I would still have taken this trade. I've got a tolerance for bigger wicks. I've got a tolerance for worse prior price action, all sorts of things. Now, let's see how this trade ended up performing. And you can see it just tagged me out. We ended up catching the very top of the move. And from here, we just started reversing. Funnily enough, this is a pattern I've thought about exploring before, kind of like an inverted flag, where as soon as you get a shift in momentum, you just take a sell instead of a buy, and quite often it would work fairly well. Obviously, in this case, you'd be tagged out, but just something to look into. Now, the next trade I took, and this was the second trade of the month, was another flag, this time on AUD USD, and I used a 10 pip stop loss here, and this was a 10 out of 10. I mean, it couldn't have been more perfect. We've got such trending prior price action. This is the prior price action for this trade. There isn't a descending channel or a range. It's just a pure bullish trend, which is fantastic. We've got momentum here. We've got momentum here. even a little bit here. And in the pullbacks, there is very little shift in that momentum. We've just got pure bullish momentum, which is exactly what you want to see. Because when you're getting these small pullbacks, flags work out really well because it's a small pullback and we're going to continue the uptrend. Taking a closer look at the flag itself, one of the things that has made this a 10 out of 10 trade is just how small that pullback is. It shows that momentum couldn't be sustained in the opposite direction whatsoever. This is the extent of the bearish momentum in this market right now. And you can see that it's very, very weak. So it's a perfect opportunity to get involved in a buy. We're getting in at a slightly better price. It was also at a really good time. So it was just after spread hours, just coming into Asian session when you know momentum is going to continue, or at least some volatility. You don't necessarily know which way the momentum's going to go. In this case, it looks highly likely that it's going to continue going up. So I entered right here with a 10 pip stop loss, and we started moving up. I was able to reduce my risk to just underneath this low. I think it was at 4.2. So right here. So my stop loss is here now. And let's see what happened. Right here, you can see that price came and it broke my stop loss by 0.1 pips, which is the smallest possible price movement possible in the Forex market. So it's kind of crazy that I got tagged out of this trade by such a small margin. And I'll show you why. It's because this trade actually ended up continuing for the next 3 to 4 days. And it resulted in roughly an 8.5% winner. So it's pretty inconvenient that we got tagged out by 0.1 pips here, just the smallest possible margin, because this would have passed us the phase 1 potentially. I could have just hit a cheeky 1% winning trade. I might have been willing to take a gamble trade just to get us into the phase 2 for the sake of this series. And from there, we would have been in phase 2 for the final month, which would have been really exciting, because the last month, trying to pass the final phase after having just made it, that would have been really cool. But yeah, unfortunately, the reality of the Forex market, sometimes you get tagged out by the smallest possible margin and you get a bit of a kick in the teeth. But this is what trading is, and sometimes you just have to take it on the chin, you know? I'm not bothered by this. I know that there are plenty of occasions where I stay in a trade by 0.1 pips rather than being tagged out of a trade. Sometimes you'll be unlucky, other times you'll be lucky. That's just the nature of the markets. Okay, so we're on the Fivers dashboard now, and you'll see that we've got a pretty interesting equity curve. You won't see many trading strategies with an equity curve quite like this one. Now, unfortunately, it's just been the market conditions this year. Normally, I am getting a couple more 2% winners, 3% winners, but this case, it's just been one like 15% mega winner, and the rest of the time just slowly losing like 0.25% at a time. So it's been pretty funny market conditions, but you can imagine this is an 11-month sample size. If you're able to take this and zoom out to like 5 years, 10 years, you will get a pretty consistent equity curve. Because this trade where I got tagged out of 0.1 pips, you can see how this would have actually increased the equity curve here, and you'd have an overall uptrend. You just have to zoom out quite a lot to see it. Now, I'm hoping 2026, the market conditions change enough so that we can start seeing a little bit more consistency again. But yeah, at the moment, for the sake of this challenge, we've got a pretty weird looking equity curve. So we still need those profitable trading days. I've had a couple small winning trades, I believe, but none enough to make that 1% target, because I only really hold my trades to like 5% plus. We're still up on the account by 2.6%, so, you know, still a profitable trader. And you can see here the NJ flag I was talking about and the reduced risk AU flag here, which both lost. You can see my win rate, which is 25%, which you would not realize based off of this, but also my risk reward is quite large. You can see my profit factor is 1.28. As long as it's above 1, you're profitable. So yeah, I'm still happy. My strategy is still working. It's just a matter of being patient, executing consistently, and not getting emotional at short-term results. So we've got 1 month left this challenge, at least, of me publicly documenting it. We'll see if we can do anything to get it extended, but I think we're probably going to be closing this out at the 12-month mark. We'll see how it goes. So yeah, thank you for watching to the end of this video. Make sure to subscribe if you're new, leave a like too, and I'll see you next month for the finale. Bye-bye.